When you look at the last 9 to 10 years of liberal rule, it has been devastating to the Canadian economy. It's surprising that after almost 10 years of policies that we've seen in Canada, that they would be reelected again.
Jonathan, thank you very much for joining us today. How are things in Toronto?
Well, not too bad. I mean, it's the day after the election. I was hoping it was going to be Liberation Day in Canada yesterday, but it doesn't look like we reached that point. So I'm doing fairly well. I'm looking at the bright side and looking for the opportunities in the market.
All right, so why don't we start right here? I want to talk about the election and get your views on it. And before we jump into it in great detail, I want to provide a little bit of context for our American viewers. There are 343 seats in the House of Commons, and whatever party wins the most seats, the leader of that party becomes the next Prime Minister of Canada. But in order to have a majority, you need 172 seats. And with a majority, you can rule with power and impunity. And unless you get a majority, though, you can't really rule with a lot of power. It's hard to get anything done. The Liberals won 168 seats compared to 160 in the last election. So they did not get that majority of 172 seats. The Conservatives gained a lot of ground. They won 144 seats versus 119 in the last election. And so why don't we start right here? Tell me, what are your views? Are you surprised that the Liberals got as many seats as they got?
Yes, I mean, I think when you look at the last 9 to 10 years of liberal rule, it has been devastating to the Canadian economy on a lot of levels. And we've talked about that in previous shows, and we can get into some of those policies in a few moments. So it's surprising that after almost 10 years of policies that we've seen in Canada, that they would be reelected again on the surface. But when you go below the surface and you look a little more closely at some of the numbers, I mean, there's a couple of issues I think that influenced the election. Number one, we did have a further left-wing party, the NDP they call it, that collapsed. And so their vote went from something around 17% of the popular vote down to 6%. And a lot of that moved to the Liberals, and that was a surprise. So you didn't get that vote splitting within the different seats. And so that was something that I think was a surprise, because the Conservative popular vote was around, I give these numbers, they're moving around a little bit as we're finalizing them, around 42% or so, and the Liberals were 43, 44%. There was about a 2% differential in the popular vote between the Liberals and Conservatives. And so typically a party that gets 42%, if the Conservative Party at 42%, you'd have a majority government. But because you didn't get the vote splitting with the NDP and they collapsed, their vote collapsed, that really swung over to the Liberal Party. The other major factor, which is quite interesting and seems rather ironic, and that is Donald Trump. Donald Trump's sort of statements in terms of Canada being the 51st state and going after and having a little bit of fun with Canada really concerned a lot of Canadians, and particularly Canadians that are 60 and over. When you look at the numbers, and again, I've talked to people who have been out on the road knocking on doors, and they got very concerned about their financial position, stability, and they felt that Mark Carney, who was just the leader that was just inaugurated and put into the Liberal Party, was going to be quite different than Justin Trudeau. And because he has a central banker background in Canada, UK, and comes from the business world, would be a better negotiator and would open the purse more to give more support and more stability to the Canadian economy at a time of tension. Now, I think that's a crazy idea, and I don't think that's true, but that had a big impact on the election. So when you look at the collapse of the NDP, you look at the Donald Trump factor, it's not a surprise then that the Liberals snuck ahead and the Conservatives weren't able to grab that minority or majority government. The good thing about what happened is that it's still a minority government, as you pointed out, Jimmy, that they won't have as much power. They'll have a fair bit, though, unfortunately, but they won't have absolute power to get through everything that they need to get through, or they think they need to get through, number one. And number two, the youth vote really started to go to the Conservative Party. We saw that in the United States. We're seeing it in other countries. The youth are getting a little smarter, and they're realizing that statism and large government spending and deficits is actually not really beneficial to anybody, including the older people, but especially the young people. So I think things are trending in the right direction. And now Mark Carney actually has to govern. And that is not going to be easy. Canada is not in a good position because of the Liberal Party and the policies that he is actually espousing, along with what Justin Trudeau was doing. And so that's going to make it difficult. I think that could set us up for a fallen government less than certainly 4 years from now, maybe in a couple of years, 18 months, 24 months. Usually a minority government survives about 18 months. And that could set us up for a large conservative majority. And that's what certainly I'm hoping. I think the trend lines are pointing in that direction.
Yeah, so a couple of things I want to touch on. First of all, you talked about the NDP, or the National Democratic Party. And once again, for the benefit of our U.S. viewers, we actually have 5 parties in Canada, but 3 of them are irrelevant for the most part. And the NDP is one of them. They went from 25 seats down to 7 seats. They pretty well got obliterated. And a big part of that had to do with their leader. And his level of arrogance knows no bounds. It's just unbelievable. But anyhow, that party is gone. So that's a big positive in my mind.
Yeah.
And the other thing you talked about, or you touched on, was what's happened to the Canadian economy under Justin Trudeau and the Liberals. And under the 10 years, this Canadian economy has grown 1.5%. GDP-wise, versus the U.S., which has grown 2.5%. If you look at it from a per capita point of view, the disparity between the U.S. and Canada is just shocking. The GDP per capita in the U.S. is around $80,000 versus Canada, which is below $60,000 now. Once again, this all has to do with policies put forth by the Liberal government, the party that so many Canadians, so many people in Ontario and Quebec voted for last night, and they put them back into power for another 4 years. So,
yeah, and one of the things I'd point out too, Jimmy, I think is important also for both Canadian and U.S. listeners, is that a lot of our value of our GDP depends on our dollar's value. And so if you're running a country like Justin Trudeau did, where you're basically chasing capital out of the country, and you're not making it easy to go into our resource sector, which is, a very rich sector, and that's across a lot of resources. And you're basically putting a lot of regulations on businesses and capital and high taxation. It has a tremendous downward move on your dollar. And so our dollar under Trudeau went from, low 80s all the way down into, around 70 cents. So that kind of move also has a tremendous impact on our wealth and the value of our GDP. If we had prudent policies, we had the policies that Pierre Poilievre was espousing, which were just sane, sensible, free market policies and shrinking the public sector. Our dollar, I think in a few years, could easily go back up to that 80 cents level. When Harper was our former prime minister, who was a conservative back up until 2015, but back in 2011 and 2007, our dollar was worth more than the US dollar. And so I think, again, it gets back to these policies. They've been devastating, but we can shift that if we had some intelligent leadership and prudent leadership in Ottawa.
Yes, very valid point. The Canadian dollar is at a 20-year low. Okay, so this is basically a referendum. This is what international investors are saying about Canada. We don't want to put our money there. The economy is too slow. There's no growth. We're putting our money elsewhere. So it's going to be interesting to see what happens here in the coming months and in years with the Canadian dollar.
And with Donald Trump trying to attract capital to the U.S. And as we know, capital moves where it's going to be respected, treated well, and you can get returns. And so I think this is going to put a lot of pressure on the Carney government, because money is going to continue to flow into the U.S. and not into Canada if he doesn't ease up on some of these policies. And we've already got Danielle Smith, the Premier of Alberta, out this morning, and she's taking a very hard position with Ottawa and saying, look, you're not going to stop us from developing our resources in Alberta. And so we need a bit more of that pushback. So it's going to be interesting days for Carney. And I think the optimistic side of me says it's going to be a rough road for Carney, and he's going to be exposed if he does not compromise and ease up on some of these left-wing ideologically driven policies that have dominated the Liberal Party.
And something else you said I just want to touch on too, and a lot of Americans don't realize this, but Trudeau created a lot of division. Trudeau, who was our former prime minister, the head of the Liberal Party, created a lot of division in this country like we've never seen before. And unfortunately, Trump, because of his rhetoric, has united this country like I've never seen before. And there's a level of national pride that I haven't seen in my lifetime. But the liberals were able to capitalize on this. And so the liberals, they basically have Donald Trump to thank for this win, because without that, they never would have won. They were all but dead 3 months ago. The conservatives, on the other hand, they built their whole campaign around, it was more focused on Canada and the damage that was done and what they want to do to fix things internally, as opposed to looking to the Donald Trump and what he was saying about taking over Canada.
Yeah, and the irony, as Pierre Poilievre pointed out, was that if it weren't for 10 years of weak economic growth and bad decisions and overregulation and overtaxation, we would be in a much superior position to negotiate with the United States and have much more leverage. It's because we're in a weakened position that we are more vulnerable. And to suggest that the party that put us in that position is going to do a better job at negotiating is, I think, the height of insanity. But be it as it is, that's what they were able to convince quite a few Canadians. So good for the Liberals. They were good at that, at least.
I think the other thing that worked against the Conservatives was that the fact that some provincial leaders in Canada, the premiers, which would be similar to a governor in the U.S., did not support the Conservative Party, the federal Conservative Party. And Doug Ford, who's the premier of Ontario, Canada's largest province with 15 million people, did not support Pierre.
Yeah, Doug Ford is a complete and total disappointment, absolute disappointment. I mean, yes, he's won in Ontario simply because the other two parties, the Liberal Party in Ontario and also the NDP Party, are just abysmally worse. But he has just been a disappointment and has not led the province well at all. And he's been really in the back pocket of Justin Trudeau up until just the last little while. And so that's disappointing. It was interesting that Gordon Campbell, we actually had premiers from the past who were in the Liberal Party. Gordon Campbell was a Liberal premier of British Columbia, come out and support Pierre Poilievre because of the devastating policies of the Liberal Party, including, their policies on crime. And we had virtually, I think, all of the police across the country supporting Pierre Poilievre because of their handling of the crime situation and letting people back out on the streets. I think for Americans, if you really want to understand what's going on in Canada, the Liberals are the Democratic Party, basically. And the Conservatives are much closer to the Republicans. So it's the same kind of divisions and issues of drugs on the streets, crime, people, the jails are a revolving door, all of those sorts of things. That's exactly what we have up here in Canada. And that really comes out of the left ideology and left-wing policies. It's really driven by a worldview that is deficient and not consistent with the real world.
Yeah, and to just further reinforce his point, so our American viewers can understand, Doug Ford, the Premier of Ontario, he's basically what an American would call a rhino. Even though he's the head of the Conservative Party here in the province, he's not a real conservative.
Yeah, exactly. Dead on.
And the other thing that I find very interesting, and once again, this has been going on since the beginning of time, but what politicians do, they try to distract the electorate. And in the province of Ontario, our unemployment rate right now is 7.5%. That's the highest it's been in over 10 years. Once again, and this is under the leadership of Doug Ford, who's been in power since 2018. He's basically saying, don't look here, look over there. And that's all that's going on right now. It's a massive distraction. And I see the economy in the province of Ontario, it's going to just keep going down this downward spiral. The unemployment rate is going to continue to tick higher. I see it easily going to 10% here in the coming months.
Yeah, and what we saw with the policy that Mark Carney was pushing is, again, more government spending. He calls it government investing. Well, as far as I'm concerned, the public sector does not invest. It's a private sector that does the investing. That doesn't mean the government can't help out. It doesn't mean they can't give some tax credits and support different industries a little bit. But they should not be in there allocating large amounts of tax dollars into businesses. And Doug Ford believes in that. And that's what one of the ways he's trying to prop up our auto industry, our auto parts, our auto manufacturing industry, is just by buying these companies off and giving them so much money, that these incentives. But he's running into Donald Trump. He's running into other problems. And so this issue that the Liberals and also Doug Ford, being, as you say, a rhino, this idea that government is going to help us out, the government is going to make the long-term and capital investments necessary, is crazy. It never works out. They squander the money. I mean, look at them in Ontario. They put billions and billions and billions of dollars into battery facilities. And whether those will ever pan out to anything, I doubt very much. And so again, you get this issue of, should the private sector be driving the economy or the public sector? This was the big debate, in Canada here. Poilievre said, no, we've got to cut taxes, put money into the hands of businesses and the private sector, which knows where to put the capital, knows where to put it at risk, how to make long-term returns. Or do we let the government become larger and spend more money in deficit finance in order to fund these great infrastructure projects? Well, we know which one's going to work, because it's 100% on one side versus zero on the other side. It never works out. When the government takes over these large initiatives, we need the private markets. We need smart people putting money at risk to make these decisions. And so I think this is why, again, we're going to continue to see, as you say, a very lethargic economy, really going nowhere, probably down, if anything. And this is going to put a lot of pressure on Carney. I think, again, hopefully, there's always darkness before light, and the light will shine, and people will say, you know what, this was a bad move. We should never have put this man into this position. His policies are not going to work. And so we'll move forward on that basis.
So one more question on the Canadian economy before we move to the U.S. economy. So the Liberals don't have a majority. They're very close, but they don't have a majority. They got 168 seats. They need 172. The NDP have 7 seats. Do you think the NDP could walk over and join the Liberal Party so the Liberals do have a majority? Or do you think the Liberals are going to form some sort of alliance with the Conservatives to get things done?
That's a very, very good question. And I would suspect, of course, I don't know the internal workings of these parties. I would suspect, because the ideological differences are so large between the Liberals and the Conservatives, that there won't be a lot of alignment there. And I suspect that the NDP, if I were the NDP, here's what I would be doing, because you have like 7 seats and you put those together with the 168, it puts you over the 172. So you can control the agenda. I would not give them a blanket policy relationship like they had before. I would say, no, you bring the bills forward and we'll influence those, and we'll vote based upon our belief that these are good bills. And I would control every bill that went through. I think that's more likely with the NDP, because they've been eviscerated. They need to build back their credibility. And so it'll depend on the leadership there. If they want to build back their credibility, they don't want to sell out, I think, to the Liberals. I think you want to be careful about that. That would be my strategic move. And I think, I'm not necessarily any smarter than some of these other politicians when it comes to politics. And so I think that's what I would expect. I think the Bloc will be siding with the Conservatives a bit more, because I think it's in their interest to give the Liberals a harder time. And they're very concerned about immigration in Quebec. So the Bloc is only in Quebec, and Quebec is French speaking, and they're very concerned about, the number of immigrants and the sort of the watering down of the French culture and influence there. I think that'll be an issue for them.
Okay, so let's move on and discuss what's happening in the U.S. and the U.S. economy. And I can't believe we're approaching a new month, the month of May. I love the month of May.
Yes, it's a beautiful month, especially in Canada, where all the leaves come out. You have new life. And it's always invigorating, and the warmth coming back into our environment, which is nice.
So I know you're a big Buffett advocate, and so we got the Buffett AGM coming up this weekend. We also have the Kentucky Derby. We have Cinco de Mayo next week. So, and it's also a huge week in terms of earnings and economic data. Later this week, we have numbers coming out of Meta, Microsoft, Apple, Amazon. Then we have non-farms on Friday. What are your thoughts on the earnings that have come out so far, and any concerns about the U.S. economy?
Yeah, I mean, overall, the U.S. economy is I'd say just walking along. It's not moving quickly, but it's there's some data points that show some weakness in the economy. But overall, it's plugging along not too badly. The businesses that we're invested in, which we follow, I got my analysts and they're following all the earnings calls, have basically been quite solid. we've been very careful to be in the businesses that we think are much more resilient and protective and shouldn't be hit too hard by some of these trade concerns and so on. So they're plodding along well, but it is interesting to see that there are businesses that are a little bit more in the heart of these trading issues, especially with China. And so we see the port business coming off. We see some of the, I think it was UPS and FedEx, and some of these companies also are seeing some diminishing activity, which can be expected because of the shipments coming from overseas are a little slower or not coming. And you're also seeing in air travel too, the airlines having some issues in some cases. So wherever there's, you need a robust consumer to spend, there's points of tension there. And, coming off a bit, which I think, is to be expected, just given, first of all, the U.S. economy was already stretched and you got large deficits and they're trying to get those under control. And some of those numbers are getting better, and they're trying to also, trim the size of the government and so forth. At the same time, you've got a globe that's concerned about tariffs. So it's perfectly understandable that there's going to be a slowdown in growth and a little bit more tension and pressure in certain industries.
Yes, I think the real pain comes in Q2. Right now, we're still transitioning from this trade war that's going on, but the real pain is going to come when these Q2 numbers start coming out in July. But
there's quite a few companies that have also said that they're not giving guidance going forward. I mean, again, I haven't followed them all now. They're just coming out as we're on the headlines, but they just can't give the guidance. They're not sure what they're going to do. Obviously, the auto companies can't give guidance. And so there's a number, as you start to see that, again, it's more and more uncertainty. And I think that will translate into more volatility in the market.
And you touched on the airlines, and we've had warnings and from Delta, American, Southwest, and God knows how many other airlines. Once again, people are not flying business class because of the uncertainty within the economy, and people are not flying for vacations or leisure travel because of the uncertainty. I know myself, we were thinking about going to Europe, but we said, we're going to wait, put things on hold and see how things shake out in the coming year. I saw another interesting data point out of UPS. They also said they were laying off 20,000 employees because they're expecting less shipments from Amazon. What are your thoughts on that?
Yeah, again, you're seeing the purchasing of items and the transportation. So again, the consumer is stretched, and the consumer is nervous, and the consumer is being careful in terms of their spending. We've certainly seen that in Canada and Spain, and it's now being translated into the U.S. economy. And so, again, some of the manufacturing numbers are off also in the U.S. Again, I just looked across a number of them. And so basically there's pressure. There's also pressure in the housing market in the United States. So you've got certain regions in the U.S. and, the markets are down, 15, 20, 25%. So if you get into areas of Florida, areas of Texas, of course, the California market is really soft also. So that starts to translate into people spending if their home values are dropping. And so, again, it's just pressure everywhere. It's just going to be, I think, tough slugging, and companies are going to have to be really careful, resilient, cutting costs and having pricing power if they're going to forge ahead. But Amazon, I think that's a good case in point where you're going to see a slowdown in traffic, and that's purchases. And that would also be probably coming from overseas also. I mean, the tariff fight with China is going to have some reverberations in terms of our market.
Yes, and to your point about the home sales, March home sales in the U.S. fell 5.9% from the previous month. That's the lowest since 2009. So things are really starting to pull back with home sales.
Yeah. Again, it's just uncertainty. I applaud most of what Donald Trump's trying to do in the United States. Cut regulations, cut taxes, make the government more efficient, try to bring back some of your industries, bring capital into your country. That takes time, and it's all about transition. So there's changes that have to take place, and that is going to create uncertainty, and businesses are going to be careful in terms of how what they're up to. It also, I think, will pull money out of the global economy. So you listen to these companies, they're saying, well, we're going to put more manufacturing in the U.S., we're going to spend more money in the U.S., and that's great, but it's coming out of other regions in the world. I was listening to a couple of pharmaceutical companies talking about pulling business out of Ireland, for example, and they said, well, we're just going to pull the business out of Ireland that we're going to be selling in the United States. But again, that's a shift, and that's a change. And so that's going to have impact on the global environment and other areas. So again, we're going through a real transition, I think, spurred on largely by Donald Trump and the American government. And a lot of those changes, I think, are necessary. the path we were on, as you know, really wasn't sustainable, these $1 trillion trade deficits and so forth. But it is creating uncertainty and changes and capital flows that are different than what people expected. And that's going to have impact on the market and on countries and on currencies, as we've seen. And we've seen major shifts in currencies over the last month or so, with the U.S. dollar coming off quite a bit, and the European, the euro up, the pound up, the Swiss franc just skyrocketing, and so on. So big changes. But that's not bad, but it's just the reality of changes and uncertainty. So I think investors have to be careful. Look where you're investing, know why you're investing in these areas, be patient, and don't panic.
And as I mentioned earlier, Warren Buffett is holding his AGM this weekend. And have you ever gone to that event?
I've been down at least 16 times. Yeah, my first time was in 1993. And then as our company, I was with AIC funds back in the day, and I was the CEO and then ran quite a few of their funds. And Michael Lee Chin, who was the founder of that company, we'd go down and bring a lot of advisors with us. So we went down year after year after year. We made the pilgrimage. It was the Woodstock of capitalism, as they like to call it. And I loved going down. So I haven't been down the last 10 years or so. But it is quite the experience, and it's a real festival of capitalists and investors. And Buffett really knows how to put on a show. He's got all his businesses, all his companies down there. You can buy from them, and marketing expertise is fantastic. But he will be 95 in August. And so he's there won't be too many more years he'll be up there. And of course, last year was the first year that he had the annual meeting without Charlie Munger, his sidekick. And those two were a wonderful pair. It was comic relief, and along with learning a lot while you sat there for 6 hours and listened to questions and answers. It's quite the show.
Yeah, I had the pleasure of going a few years ago, and I would highly recommend for anybody to go. I want to take my kids. I would have taken them this year, but the dollar is killing me, so can't afford it. But I would highly recommend it. It's a great event. It's almost cult-like.
Yeah. Well, it's a real following. It's a great environment, and if you want to buy any jewelry at half price, you can get into Borsheim's, and providing it's not a branded jewelry. So if it's an unbranded jewelry, and they sell it to shareholders for half price. So that alone. So if you want to pick up some jewelry for your wife or your spouse, then that's a great avenue. I enjoyed that in my early days, and I went down in 1993 just before I was married, so I was able to buy some jewelry that my wife could wear at her wedding. So anyway, but it's a great time. You meet so many people, you can network, and everybody's just having a lot of fun talking companies and businesses. And we were able to go to Gorat's, which is his favorite steakhouse in Omaha, and get big ribeyes and get big steaks there. And my former partner, he and another fellow who are very big guys, they picked up 34-ounce steaks and knocked them down. But that's a great place, Omaha, Nebraska. Middle America, good old values of America.
Yeah, I bring it up because it's going to be interesting to see if Warren Buffett has any comments about what's happening in the economy. So far, he's been very quiet. He's been asked a few times during interviews, and he refuses to answer. So it's going to be interesting to see what he has to say about what's going on. Another stat that I thought was really interesting, I just read recently, was that the number of billionaires in the U.S., it's at 1,990. That number is up 45% since 2021. Just think about that, okay? Once again, and this all has to do with the policies put forth by the previous administration and also by the Fed and the money printing that's going on. Yeah. What do you think of this number? And are you shocked to hear it?
Look, I like it when wealth is increasing, but unfortunately, with these policies of monetary expansion, printing money, and these record low interest rates, so you're supporting zombie companies in many cases, and not really bringing financial discipline to the money into companies. It rewards, sort of inflation, and businesses can take advantage of that. And people that are in large organizations or companies, they get the benefit of that. Asset values go up. But they're really not going up and creating true wealth. It's really just inflation. And this, I think, we should be very upset with. And that's one of the things I think Trump is trying to correct, and Poilievre was trying to do also in Canada, by bringing real wealth back to the country, which has to come through private investments. You have to produce. If you don't make more goods and services, you can't distribute more. And this idea that you can be a redistributory economy without producing and making more things is crazy. And all it does is put the prices of things up if you print more money, but you're not making more things. And so you just chase the prices up. And that rewards asset owners. And so you see that reflected in this billionaires list. And I have no problem with someone being a billionaire. I mean, that's wonderful. If, again, they've done it sort of the old-fashioned way through hard work and building and creating real products and services of redeeming value. But if it's just been spurred on by bad central bank policies and bad fiscal policies on the part of the government, that's a horrible thing. And what's happened is you're getting a big split between the haves and the have-nots. And so you've got a lot of people on the lower end are not benefiting. And the only way they're going to benefit is you take an inflation rate down and you create more jobs and production, more jobs that they can work at so that they can actually have a standard of living. And you have to give them purchasing power so that that money actually can buy more over time. If you have a productive economy, your money should be able to buy more, not less. And so the only way to reverse this is we've got to get control of deficits and our debt. And we've got to stop printing money. We got to get interest rates to a proper market level and not what's dictated to by a bunch of central bankers.
Yeah, the rich just keep getting richer. But
Yeah.
So we have a Fed meeting coming up next week. What are your thoughts? And maybe I can get your comments too on this war of words going on between Powell and the president.
Yeah, I'm not, again, we watch the Fed, and we're making longer term investments. So we're not trying to guess and anticipate interest rates. We're not really any smarter than the overall market is trying. I mean, I do think that the rates probably should be coming down a little bit more in the U.S. There is softness, but it would have to be slow. There is the concern of inflation also. So there is that tension. But around the world, interest rates are down in most of the other countries, and the U.S. I think is slowing, and they're having a housing market problem, and in many of the regions, not all the regions, but many regions. And so I think that the pressure for the Fed to drop the rates a little bit to start easing. The 2-year rate would indicate that they have room there to drop at about 25 basis points. I mean, the 2-year Treasury bond rate yield is generally what the Fed operates off of to a certain degree. And so, so the expectations could be either they hang tough or about 25 basis points is certainly probable. The tension between Trump and Powell is classic Trump. I mean, he likes to put pressure on people, make them squirm a little bit, make them feel uncomfortable. He obviously does not really like Powell. We saw this from before his first term. And I think it's just Trump making him feel uncomfortable and keeping the pressure on him. Powell, I'm a firm believer that the central banks are very political. I don't think they're independent. And I think they generally are more favorable to the left-leaning side of things. Powell was cutting rates back when, of course, Biden was in power and the Democrats, and he was trying, in my view, try to encourage the economy so that gave a higher probability for them to get reelected. And now he's all of a sudden tight money. So I think there is a bit of hypocrisy there. And I think Trump's just pushing and calling him out so that he can at least get some mileage out of him, hopefully, and maybe put pressure on him to step aside.
So let's talk about the various asset classes in the U.S. In the last few months, the S&P, the bond market, the U.S. dollar, they've all been under pressure. And the traditional 60-40 portfolio, the wealth destruction has been immense. Well, what sort of advice would you give to investors in the U.S. on how they should position themselves or deal with all this turmoil that we currently see in the financial markets?
Well, on the bonds side, we really approach it quite simply. We typically will buy bonds based upon the person's time horizon for the assets. And sort of match that to a large degree. We also, over the last number of years, kept fairly short because to me, interest rates could go up, they could go down. Of course, it's a very simple statement to make, but what I'm saying is that it's going to be driven by policy, and it's difficult. I know super smart people who say we're going to go into a deflationary crash. And then there's super smart people say we're going to go into an inflationary bubble, right? And it's all over the map. And it's difficult to know because it's going to be driven a lot by policy decisions and what takes place and confidence in the marketplace. So when we come to the bond market, we typically are buying 2-3 year bonds. We're holding them to maturity. We're in the U.S., we're grabbing the close to 5% returns and just scooping that and keeping it safe and not making big yield curve bets. And that's just what we do because we're more equity guys. And so when it comes to the bond market, I don't want to lose any money. Our clients want it for a position of non-volatility and consistency and predictability. And so that's what we do. And the yields are still really good in the U.S. These other markets. And so we just cream it and make it a simple decision in terms of that. So we're not making these big, go way out on the yield curve. Yeah, you can do that, but then you're going to be in there market timing and stuff like that. I think it's a difficult trade and not necessarily clear how it all works out, because that's going to be driven, as I say, by policies. On the equity side, and then we also are keeping about 25 to 28% cash. So really, really short term. And that's because we are concerned about valuations. We are concerned about the reordering of the global trading arrangements that are taking place. I mean, there's a bit of a reset going on. Not to hate to use that word, but that's really what's happening. The sort of redoing Bretton Woods is what Trump is trying to do. So in our view, having cash on the side makes sense. And still, if it's in Canada, it's going to make 2.5%, 2.75%. If it's in the U.S., you're going to still be close to 4% or so. So cash, some bonds, short-term, high-quality bonds, and then on the equity side. On the equity side, we're carrying, in terms of that, a good chunk in the precious metals, and we stay there. It's done well. It can come back. I would not be surprised for it to come back. That's the way it moves. But until we solve our deficits and debt problems and a lot of these tariff negotiations and all of the issues that we see in the marketplace, inflation, then I'm sticking with our positions. We own a lot of royalty companies, a few mining companies. That's a position. We've got some in the technology space. You really can't avoid the technology space. Some software businesses are great businesses, and also in some infrastructure companies, a number of infrastructure companies. So basic businesses, solid companies with long-term prospects and long-term contracts. So I think, again, find great companies that are really well positioned, perched in secular growth areas in the equities. Keep some cash on the sidelines. Things get messy, and then on the bond side, we're just being very careful and just picking off yields at 2 years, 3 years, and just being very, very safe in that area.
Jonathan, you mentioned 28% of your portfolio is in cash. What percent would be allocated toward precious metals, either physical or miners or royalty companies?
Our total portfolio, it would be just under 20% of our total portfolio. So if you take the percentage of our equities, it's actually pretty high. So we're probably running about 25% or more of our equities in the precious metals sector. And that would include companies like Franco-Nevada, Wheaton Precious Metals, Cisco Royalties, Agnico Eagle we've owned now for a couple of years, and we've been very fortunate because that's been a stellar company. And so we own some really serious companies in that space. We're not buying juniors. That's not our game. We're not geologists. We're not in that space, but we like the exposure to that area. I do think that silver is, it's the famous last words, quite cheap. So if we can pick up businesses that have a little bit extra silver in them, that's fine. I think that their silver gold ratio, and again, I'm not a fan of predicting ratios. I've heard people predict them for the last 20 years and they're always wrong. But when it's 100 to 1, that seems a little bit outrageous. And so I think silver does have a little more upside and driven by industrial demand and so forth. And also copper, some other strategic metals, copper. And we own a company called Altius Minerals, which is a royalty company, and they have copper. They have some iron ore that is very green friendly, some potash resources along with some gold. So again, the commodities, I think, again, are a good place to be if you can find good cash flow oriented commodities where there's not a lot of exploration risk. Like from our perspective, there's other people who are great at exploration risk. I respect them. That's not our game. So we like the space, but we try to buy good companies and also some strategic minerals. Like I say, copper is, I think, a very important one also for the whole electrification, digitization, AI, and so on.
62% of Americans are invested in the stock market, either directly or indirectly. And of course, everybody's single largest asset would be their homes. And we've already talked about how the S&P has pulled back, how the housing market is pulling back. Are you concerned? And this is going to have a big impact on wealth effect, okay? And people are just going to stop spending. And we've seen that in so many companies here in the last few months. Even Louis Vuitton, I don't know if you saw this, but they came out and they cut their guidance. They said sales were down huge in the U.S. Can't remember the exact number. Also down big in China. And I thought it was interesting because not even the rich are spending money. But do you think there's a threat of a recession here in the coming months?
Yes, there's no question there's a threat of recession. I mean, we're in Canada. We're basically, I would argue, we've been in a recession when it comes to real economic growth on a per capita basis. And I think the U.S. too. There's been so much spending. I mean, Jimmy, you think of the last couple of years, or not even the last year for that matter, of the Biden administration, which is outrageous amount of spending. Not, I mean, through the whole COVID period, and that's coming off. And you've got 10, 12 trillion dollars that has of debt that has to be rolled, and you've got all these tensions going on in the world as we rebalance trade and the tariffs and so forth. If that doesn't take the market off and down, then I don't know what will. So what are you seeing? You're seeing housing prices coming off in different markets, especially the ones that were really quite inflated in the U.S. You're seeing some pressure on the funding of those loans and mortgages. You still have issues below the surface on commercial properties. That hasn't disappeared completely. We don't hear much about it, but that's underneath the surface. Manufacturing and some other areas are weak. Housing construction is weak. And so you get into that, it starts to transfer into people's pocketbooks. And uncertainty then also is an issue. And people then get more conservative and careful, and they start sitting on the money and spending a little bit less. As your neighbor starts to spend less, you start to spend less. And then your other neighbor starts to spend less. And that is a ricochet effect. It's a domino. And so I think that's what we're starting to see now. And that's why I think investors need to be careful, know the companies you're buying, make sure you're putting appropriate valuations on them, keep a little powder dry. There's money to be made in every market. I'm not telling people to run off the market, it's all going to collapse, but just be careful and know where you're investing, why you're investing. That's why we go into different sectors, and some, hedges quite well to certain issues, and some hedges, to other challenges, and keep a little cash around. So just be careful. And things have been gone quite well, but a lot of that growth was funded by pure debt and deficits. And the deficits were just outrageous. And again, Trump's trying to bring these into line, and that inevitably will put pressure. That's a good thing. If you're having pressure in your economy because you're shrinking the public spending, and you're trying to balance out the economy in a healthier way, that is a good thing. But it's not easy, and it will create volatility in the stock markets. But again, you don't want to stay on an unsustainable path, which is what we were on. And so I think it's very important people see the bigger picture, that if it's going to be healthier 3 to 5 years from now, that's what we want, rather than pretend to artificially keep asset prices high when they shouldn't be at the levels that they're at.
Well, Jonathan, this has been a great conversation. I always enjoy our chats. And as we've already discussed, we're living through some crazy times. And during times like this, people need help with navigating these financial markets and looking after their future earnings. And if they would like to have a chat with you about how to navigate these markets, where can they go?
Yeah, best place to be our website, which is RockLinc, RockLinc. So link with a C, rocklink.com. You can email us at info@rocklink.com. And if you go on our website, you get all our contact information. Absolutely come in, talk with us. We can Zoom call with you. You can come into our offices. We're in Burlington, Ontario. And we love to talk to the people. There's no cost, there's no charge at all to go over someone's portfolio. And I think it's really important because over the last couple months, especially in Canada with the tariff conversation and the election, there's a lot of people just wanted to sort of jump right out of the market, and you have to sit down and talk with them, and then they stay put. And we're positive year to date on all our numbers, and being very careful. And so the worst thing you can do is sell at the bottom and buy at the top. And in order to not replicate that, you have to know that what you're investing in and feel comfortable with, the marketplace, and stay in it long enough. And so sometimes you just need a professional to talk with and to go through some of the issues. And we're more than glad to do that. We've got a fantastic client base who love talking to the people. And that's what we're in the business of doing, investing and helping manage people's assets.
Jonathan, once again, thank you. And I look forward to our next conversation.
Great. Thank you very much.